Hey traders, welcome to Charts and Giant Mugs of Coffee. Happy Friday, everybody. Got a new coffee today. I got some coffee from a company called Stumptown. Oh my gosh, it is smooth. And I tend to make crazy, mud-like coffee. I can't even turn this into the crazy bitter mud that I usually make. It's really good. So trying some new stuff today. It is smooth. So what do we have in the markets this morning? We have a smooth market today. We have a core retail sales move that's been an interesting one. Let me bring you up to speed as to what I did so far with the HPMRs. And then, of course, as always, this show is about your questions, and we'll dive into that in just a sec. So we had a hot zone at 8:30. It was a core retail and retail sales hot zone. And the idea was to take advantage of the hourly price movement ranges before the hot zone. Now, hot zone trading, gang, is a type of trading that requires at least a couple times of watching the way price action responds to hourly price movement ranges. Day trading, especially hot zone day trading, also requires a very good comfort level with your order entry platform. One of the things that I find day traders are very good at is they're extremely comfortable putting in orders, modifying orders, canceling orders. That's definitely part of the learning curve of trading. One of the things that Trish and I are working on through summer is our summer school series over at countdowntrader.com, covering things like, Rog, you talk about alerts a lot. How do I do that? And it's a summer school series on the Thinkorswim platform, which is by far the most popular here at Simpler. Rog, how do you put in a limit order? And why would you put in a limit order? For what purposes? So limit orders, alerts. How do we exit trades with a stop? How do we exit trades at a target, right? Where's my little notebook? Trish and I had a really great conversation about, hey, what kind of summer school topics could we have? So definitely check out Countdown Trader over the next 5-6 weeks, because we're going to be releasing videos throughout the remainder of summer and tackle some of those questions that I believe are really foundational skills that we need that really don't have to do with, do I buy or sell, but how do I buy or sell? How do I use my platform? And gang, I'm going to tell you something. I am not the world's authority on Thinkorswim. I use very specific aspects of the platform. I keep my approach really simple. And I think that these videos will really be quite helpful to a lot of you, because we see these questions come up in the rooms. So looking forward to sharing more of that with you all. But really quickly here, hourly price movement ranges. We had an initial reaction to the downside, which is the one that I wanted to take advantage of. Very small window, very quick wick, and that's hot zone trading. What's interesting, and I was just mentioning, because we're in day 4 of our live trading for my day trading class, day 2 of the elite trading. So we're wrapping up that class. I am mentioning that, gang, because once we've wrapped up this class, the offer to, which is really a bundle, to be able to have the HPMRs for a year and get the class. After this, they uncouple. They're going to be unbundled, and they're going to have their own independent pricing. Right now, you take the class, you get a year's worth of HPMR updates. So that's going to end. And I'm just mentioning it because on Monday or Tuesday, when someone says, Rob, can I still get that class and that bundle offer? Because now I see they're 2 different prices, and I could have probably got both for about the same price. I don't know if that's ultimately what it's going to be, but I'll tell you right now, you get the elite, you get a year of HPMRs. Okay. Now, HPMRs, let me show you what bonds did with that hot zone. This is what they're designed to do. What is the typical range of a market, even in as high impact time as an 8:30 high impact economic release, aka a hot zone? This is their job. Do you see that? This is their job. And when you don't have the indicator on the screen, I'll tell you, gang, because a good part of my career I didn't have. It just looks like crazy wicks. Right? Why did the market go there and stop? Why did it go to the bottom and stop? right? And then once you put the HPMRs on there, it completely changes what those wicks meant. That's the power in them. And that's, basically the plan this, every 8:30 hunt zone. By the way, punchline today did nothing. Had nothing. I was looking for a quick short to the downside, which initially was the move. We didn't get high enough to trigger the short. And then on the low side, the window for the hot zone that then translates to the window for our regular pre-market day trading. The hot zone definitely created the volatility I wanted, but again, triggered no trade. And I started off that live trading session, by the way, reminding my traders, reminding myself, gang, there's no reason that we have to have a trade. We have the rest of Friday to focus on. So being flat is a position. All right. So that's what we did this morning. A quick glimpse into that. And let's jump into your questions because I see them stacking up. I love it. And, if you've never been to a hot zone event with me or day trading with me, you'll see that we keep notes through the whole event. So once we're done, you've got a really good idea and a good set of notes to reflect back on. And I'm a big note taker. And this is just going to be my quick advice to everybody here listening. Whether it's in a planner, binder, with pen and paper, which I love, or whether you use something like Evernote, or I love Workflowy, right? That's what I share with my traders. All my notes, my reports, my daily analysis goes on Workflowy to my members. Find a way to document what you're doing and what you're thinking and why. It will absolutely be a huge help to you as you get better and better and better as a trader. All right, kicking it off with the first question here this morning. Is XLF still good for long puts? Well, let's jump on over. So this was something that we did in the Sector Secrets Mastery. We are long puts XLF and in XLC. So let me walk through the setup with you all. And Sam, by the way, the answer is no. The answer is absolutely no. On the daily, right? On the daily, it's a no because we already built that position on the move higher. Now, what is that move higher? Call it a bounce. Call it a retracement. If you want to call it a reversion to the mean in a downtrend, call it whatever you'd like. Call it a bologna sandwich. But whatever resonates with you, it's that move higher that we're getting into. So the XLF trade was a daily time frame, which we're actually looking for a second target on now. This has been a great trade for us as XLF has continued to move lower from that reversion, right? From that reversion. So as far as intraday, well, we can't really know until 9:30. So I'll start looking at what I'm going to do with XLF, if anything, as a day trader after the bell. Okay, Sam? So thank you for the question. The trade was really the daily. That's what I shared with the members. And that it's continuing to be, a great open trade to have. The other one was XLC. What do we do, by the way, in those two corners of the market? What is it that we're doing in Sector Secrets? We're using sectors. That's what I do. That's kind of my thing here at Simpler. The broader averages, S&P, NASDAQ, Dow, are composed of sectors. If we can find relative outperforming sectors to the up or downside, oftentimes we can use that sector as a proxy to another setup in a broader market, but it has better structure. If that sounds appealing to you, check out the free video back at the Simpler Trading YouTube channel. Check out the free video from yesterday. Here it is. No, did I do that? Actually, I touched on that, I think, a little bit here. I might have touched on that a little bit on the day trading hot zones. But in yesterday's premium video for the futures members and for my Sector Secrets, I did talk about XLF and XLC, but I might have talked about it in there as well. And so think about what pieces of a broader average might give you a better opportunity. And that's where XLF came from. It's clearly been delivering very nicely. All right, next up, I have an SPX put spread off the hourly from yesterday. Watching it overnight. I'll trade up, move. What are my thoughts? Well, let me be straight up with you, Dan. First of all, I don't use hourly charts. I use a 5, I use a daily, and I use a weekly. But I can give you my thoughts on SPX, but it's not going to be via SPX at all. It's going to be via ES. If I want to read on the S&P and the Nasdaq on the Dow, it's never going to be via an SPX or DIA or QQQ. It's always going to be rooted in the most broad and complete view of the risk appetite or risk aversion of that market. And that will always be the futures. That will always be the futures. That said, you've got a put spread. Look, if I'm trying to get a grip on what the 5-minute S&P is doing, it has transitioned to an uptrend since about 5 minutes to 9. It's above the line in the sand. But as it heads up into resistance, maybe the 34 EMA on the low, not entirely loving S&P as a trend, but the 5-minute is heading higher. I really can't, I'll be frank, Dan, I don't have that set up, and I really don't want to undo whatever homework you've done because I don't have any, I'm not taking the pulse of the market through the hourly, and I don't want to undo your trade or in any way confuse you with analysis that may not really be applicable to what you did, okay? But as far as what the trend is right now, yeah, you mentioned you're keeping an eye on the 5. Okay, now we're talking the same language. We've gone from neutral to bullish. Keep an eye on the underlying structure of the market via the free tools that I give you all in all the main rooms. That trade flag Momo trend, if that remains green, remember that the structure of the market is bullish. We make a traffic light simple. In that regard, remember that we're also going to be dealing with the open, maybe a little bit of an echo of the core retail sales number. And, from a volatility perspective, support is waiting 38.08 and a half to 38.02 and a quarter. So if you're looking for hourly support that could continue to be how the market stair steps higher through the session, keep an eye on that hourly price movement range. So Dan, hope that helps in some way, but that's the way I'm viewing that right now. How the view of plan to bond swing put. I can look at bonds, but I have no idea what that means. I'm happy to look at bonds though. As far as getting short bonds, which I think, my friend, we are on the same page. I would look at that 142 handle on the ZB futures, and that would then translate to possibly puts on TLT. I am not a bond bull, but I have acknowledged that the previous downtrend is broken. And in that, respect the trend that was. That's 140-year-old Charles Dow wisdom. And I'll focus on an overbought, potential overbought short sell in futures or long puts in the TLT or the ZB. Okay. But yeah, I'd be like the short side of that, if that's what you're asking. Crude oil. My gosh, crude has been nuts. Crude has been absolutely crazy. I liked the buy, right? And one of the things I mentioned to my traders yesterday is we were waiting for conservatively either a minor low, which broke, and then now we're getting another minor low that has, as of the crude oil price of 97, north of 97, we have a minor low that has completed the conservative confirmation. Staying above 200 is a big deal, but what a crazy candle yesterday. Really frustrating because down in that area, 200 propulsion, minor low, break of the minor low candle high. This is bullish now, right? So really, really interesting and difficult crude journey, but it never went bearish. It never went bearish. It's been remaining oversold. Just when we go way off track in terms of volatility or way off track in terms of levels that we think should have a better grip as support or resistance, that's when being a trader can be tough. But Alan, yeah, I mean, I think some of you are still in the USO call that we took in the Sector Secrets room, and if you are, cool. That has now a Darvis box hold 200 propulsion hold, and a minor low confirmation north of 97 on CL. And that's what then translates to MCL, micro futures, and USO, the crude oil ETF. So yeah, interesting stuff there. What a journey that thing's been. All right, next up is what type, hey there, Nick, what type of stop loss orders do I use? I was using a trailing stop, but didn't protect my position in the extended market hours. Thank you. So when we say what type, it depends on the position. So stop loss orders are really stop orders. And stop orders in equities are applicable between 9:30 and 4, but they're not necessarily, after hours. After hours is futures or Forex, right? So when we have a stop in a stock, an ETF, or an option on either one of those, our world is 9:30 to 4. That's it, which I know you know, Nick. In terms of the futures, and Forex, that's where stops actually mean something, because the market's open and your order can actually be executed with some proximity to your price, not waiting for the market to reopen. So if I am dealing with an overnight position and I've now transitioned to a trailing stop, I got to sleep at some point. So I leave the trailing stop out there and just go to bed. It might be a break even. It might be a trailing. It's going to be just some sort of order that is physically put in the market, parked, right? That's going to be a protective order for me as I sleep. So it's just when you say what type, it depends on what stage of the trade we're in. If it's overnight and I've only hit the first target, it's a break-even stop. If it's overnight and I've hit the first target and I'm on the way to the second target, I might put in a trailing. So it depends on what stage of that management that we are in. But yes, I think at night makes sense. We don't have access. I'm not going to have alarms going off on my phone, waking me up at crazy hours. Been there, done that, especially when I was a Forex trader. All right. Let's see. Next up is, do I have any thoughts on a C fade? Well, it's a trend. It's a trend. So I like to fade in chop, right? That's where I turn into Darth Fader. Oversold, overbought, slow stochastic, Darvis, right? I fade and chop. C is a trend, Delta. So what I would say is I need a rip higher, a la what we saw, say the 28th or the 8th. So 28th of June or July 8th. But I think, we're on the same page in many ways, Delta, because instead of trading Citi actually the exact same days, I traded XLF instead. And the reason I went with XLF instead is when I crack open an ETF and I see a number of those high concentration weighted stocks that are all heading lower, rather than playing an individual boat, especially during earnings season, rather than playing an individual stock, an individual boat, I'll play the tide, right? And those are decisions that we make in the Sector Secrets room as far as a stock versus the ETF, or a sector versus the index ETF. So I like the idea, but we need another bounce. All right. Next up is, would I short the S&P with a stochastics at 90, even with two green multi-trends because of buying exhaustion? Stochastics. So Michael, thank you for the question. Any oscillator, not just my stochastic settings, any oscillator on any time frame, if it is occurring in the context of a trend, is not the right club for the shot, is not the right tool for the job, because trending markets are the opposite of what an oscillating market is. An oscillating market is, it's oscillating. It's stuck in a range and it's going back and forth between that range. A trend is the exact opposite behavior. We do not want to apply a stochastic of any reading. I don't care what a stochastic's saying in a trend. It's not the job. I want to know what my trade flags are saying. I want to know what my multi-trend is saying about the structure of the market. I want to know what my wave is saying. I want to know what the moving averages are saying. So now that means, yes, we have a toolkit for choppy markets, and we have a toolkit or set of indicators for trending markets. Once you divvy those up, then you're not going to be confused as to ever, do I care what the stochastic is saying? In chop, yes. In a trend, don't even care a little bit. So thank you for the question, Michael. I think that's a very, very important question. And I'm going to wrap it up here with Maurice's comment. Gang, everyone listening to my voice here, I will never, ever, ever get on Twitter, Instagram, LinkedIn, TikTok. There's over 20 Raghees on TikTok. It's only one me. 20 fake Raghees on Twitter. I can't even get my own name on TikTok. TikTok, any social media. I will never solicit you for crypto or anything else. There are some serious scumbags out there who are pretending to be me, chatting it up with my members and saying, hey, I'll manage your money. And gang, it's not me. Tell that scumbag, whoever it is, to go pound sand. I want to walk into the woods with them and come back alone. People ripping off my members. Violence has to happen, really. So please, please, please remember, I will never do that. If someone reaches out to you saying it's me via any of those social media outlets, tell them to pound sand, right? Tell them to pound sand. I absolutely loathe those people, and there's nothing really we can do about it. We report, and for those of you wondering, Rog, report it, gang. We report one and 10 more pop up. This is just the best thing to do is be armed with the information, but I will never do that. So thank you for that, Maurice. I really appreciate it. Block them. Tell them Raghee said beep. And and please know that none of us at Simple will ever do that. We will not solicit you via social. All right, gang, I got to go. We've got the last day of elite trading happening now. If you want the bundle of the class and in a year's worth of the hourly price movement range indicator, it must be updated to represent the most current volatility, much like, say, implied volatility needs to be constantly in a state of updating and reacting. Check it out. Again, I'm reiterating it now because it's as good a deal as you're going to get ever that I know of on this, because it's the class and a year's worth of updates. All right. Be good to each other. Have a wonderful weekend. I'll see you Sunday for our Weekly Notes live show. Until then, gang, be good to each other.